All right, good evening, everyone. Good to see everyone once again. My name is Alex from MarketWise Asia. Today is, as usual, Friday. All right, so today is 20th of May 2022. If you guys can hear me loud and clear, please say a hi to me in the comments. Do you think I look fresher now because I just had a haircut this week? I think my hair is neater now. I think it has been more than 6 weeks or 7 weeks since I last cut my hair. Okay, I'm not like J2, the stock god where I cut hair like every 2 to 3 weeks. No, I wait, I think, until about 6 to 7 weeks, then I cut. Okay. Yeah, all right. So if you can hear me loud and clear, please say a hi to me in the comments. I'm friendly, I won't bite. Okay. So yeah, so just say a hi to me. Give me a like, share, or comment if you are on YouTube. All right. So welcome you also, give me a like also, and do subscribe to our YouTube channel as well. Let me take a look at the comments right now. Okay, so Faith, right? Faith said that first time using YouTube to watch this live, right? Have always been using Facebook. So actually just some opinion from you guys. So actually, do you guys prefer Facebook or YouTube, or either one is fine? Just want to hear your opinion output, okay? So anyway, I will still broadcast on both. So some of you might watch on Facebook, some of you prefer to watch on YouTube, doesn't matter. But just want to share, as in just want to let you know that it is broadcasted on 2 channels. So it's up to you guys. Okay, so hello, ZJ, Kip Leong, Amanda, Simon, Shirley, Karen, Richard, Bolo, Ma, okay, Kailing, Gilbert, Gale, SP, Han Hock, Pauline, Audrey, Mary, okay, Christopher, Yu Yang, Jolene, Kaiman, okay, Mark Siu, Christopher, Hun Pham, Edmund, okay, Zoom would be the best. I think, I think no lah, okay, at least, Zoom, very troublesome to set up. I think YouTube, even if I use Zoom, I still need to broadcast, right? I still need to broadcast to Facebook or YouTube as well. Okay, all are friendly. Good job. Okay, fantastic. All right. Okay, so by the way, I think I'm a bit low on energy today. I think because I have been accompanying my dad to the hospital for the past 2 weeks. Okay, so it's been running here and there to different hospital, and actually, the most draining part is actually the waiting time. So every time, he has seen a dog, then do some tests, and then there's some waiting time to go for the appointment, waiting time to see the doctor, waiting time to do some tests. And yeah, all these are very draining. So once I reach home, then it's like, well, the whole day is gone. It's kind of draining. Anyway, my dad is okay, in case you're wondering. So, okay. All right. So just to share with you, of my daily life and such. So yeah, in this 1 to 2 weeks, quite tiring. I've been draining by just waiting at the hospital for the appointments. Okay. So yeah, so right now we have about 181 people in the room, near to 190. So today's I shall kickstart the session. So by the way, if you just join me, do give me a like, share, or comment. Liking is free, doesn't cost you money. But it also tells Facebook or YouTube algo that you want to see more of our content in the future. Because if you don't do that, Facebook or YouTube, you think that you don't like our content, and next time it won't show you our content on your platform already. Okay, so do give us a like, share, or comment. Do engage with me, give me a comment, say hi to me, whatever it is. Okay, yeah, thank you very much. All right, so let's go to the sharing right now. Let's take a look at the market right now. So today's market is actually quite volatile. All right, so let me take a look at the index right now. Dow is down 0.63, S&P 500 is down 0.68, Nasdaq is down 0.84. So today, actually before the session starts at 9:30 p.m. Singapore time, it was positive, I think more than 1% plus. But once the session starts, right, it went down and then goes down again and goes up again, that kind. So it's a volatile sign because today is actually the options expiry day for the S&P 500. Okay, later I will share with you more on that. So it's a volatile day today. All right, so as usual, disclaimer first. Okay, so whatever I share today is just my personal opinion. It's just for education, information purpose. It is not a recommendation to tell you what to buy or what to sell. So Alex is always wrong. So please don't copy me. Okay, my opinion doesn't mean that I'm right. So please do your own due diligence. Okay, so today's topic, as usual, it is back to the bear market again. The market has been always coming down for some time already. I think you should know. Okay, so is it really a bear market? Is it bear market rally? Because recently, for the past few days, market has been going up, and then come back down again, and then it seems like ping pong, right? So is it like bear market rally, and is another brutal leg just around the corner? So what do you guys think? Okay, do you think that will be another leg down? So previously, in my previous session last week live, right, I mentioned that it could be the bottom. Okay, but of course, my opinion can change. But right now, I still hold the opinion that we are somewhere near the bottom, or in fact bottom. Of course, I will share with you the context again. Of course, I could be wrong. So let's see this Friday, as in today, closing, and tomorrow and next week, and see how it goes. Okay, so I will share with you, also dive into the equities, the Forex market, and also the bonds market. All right, and see how the intermarket analysis by seeing different asset classes might give us clue on how the market direction might move in the coming weeks. Okay, so before I go into that, right, so I just share with you what is happening right now, some news, right, that you need to know. Okay, so I think in the past recent 2 days, I think that's in the news is the health issue regarding this virus, the monkeypox virus. If you've been watching the news, reading the news, I think you should know now. And actually, this monkeypox is actually getting very close to us right now. So you can see from Channel News Asia, all right, you can see that this monkeypox, it is reported in Australia right now. So I won't be surprised that within the next 1 to 2 weeks, there might be cases in Singapore. I think, of course, the Ministry of Health, I think they should be getting ready for it already, because right now our airport is already open, our economy is open, travelers are coming in and out, so there's a very high risk that it can be brought in. Okay, and of course, if you want to have more information on these monkeypox things, right, I think you can just Google and read. It is all over the news. Okay, all right. So it's spreading, and what disease it is, and how dangerous it is. So right now for monkeypox, right, there is no cure. So it's more like supportive kind of help. Okay, there's no cure for it, and it does spread. Okay, it does spread. So it actually came from smallpox. Okay, of course, smallpox is more severe and is under control by the vaccine, but monkeypox is a kind of brother of smallpox. But right now it is spreading right now. But the key things that I want to mention about this is smallpox things, right? It is, would it be another deja vu like the COVID in 2020? So to share with you the context, right? So I remember that in 2020, when the COVID first started, okay, or in fact it's 2019 late December, all right, when we heard of the news of the COVID is inside China and starting to spread. So at that point in time, I was thinking, in January, right? In January, I was thinking, hey, how come like the market doesn't have reaction to this COVID one? So that's the pandemic. Right? At least, I thought there would be a knee-jerk reaction, but there isn't. So I agree that maybe the market knew something that I don't know. I didn't really, think too much about it until I realized, hey, until when the COVID hit the US shores, okay, and people die, then the market start to panic. So it has to wait. I think has to wait until really hit until the Amos, okay, especially the US. Something big happen in US, then I think the whole world will take notice. So how severe it is, I do not know. So if things get more serious, right, there might be a knee-jerk reaction. The market might sell off, or the market might just take this as an excuse to tell you that because of the health issue and such, right? And the market went down even more. So this could be something to keep your eyes watch out for. Okay, for this monkeypox. I don't know how it will pan out. I don't want another kind of lockdown on it. I'm not sure about that. Okay, so just to let you know about the current news right now. Okay, and also the yeah, as I mentioned, right, today is the options expiry, so do expect volatility. And as mentioned already, so the market is already very volatile today, so it's being pop up and down. Okay, so you can see that back again from this stock chart. Okay, so right now Nasdaq is down 0.89. Just now it was positive just now before the market starts. Okay, so if you want to read more about that, you know, you can go to Bloomberg. I think this is a paywall article because I've already accessed Bloomberg articles for a few articles, so I can't really read it now. All right, so but in fact, it is just telling you that, you know, the S&P options is expiring today. Okay, and the most concentrated strike price is the 4,000 price level. Okay, and right now the SPX, it is at the 3,870. Okay, all right, so this is some of the news that you want to take note of. Of course, as I mentioned, right, last week I mentioned that we are actually at the bottom. The market should bottom out or at least close to the bottom. Of course, I could be wrong. It is just my personal opinion. I share that, you know, some of the things I'm watching out, like the VVIX, okay, like the VVIX that I mentioned, VVIX. I won't go through that again today, okay. If you missed it, you can just watch my last week live. So talk about some of the market breadth, the internals, etc. So yeah, and just want to share with you some of the traders that I respect very much. For example, like Adam Khoo. I think some of you should or might watch his video also, and Robin Ho. Of course, Adam Khoo, his opinion is actually very similar to mine. He actually think that we are at the bottom, okay, or very close to a bottom. It's actually is exactly the same opinion as me, lah. Okay, all right. So you can go to YouTube. You can go to YouTube and search for his video and watch his views on the market. I think he just published, I think 1 or 2 days ago. All right, so you can go to Adam Khoo, okay, and this video over here. All right, I shall just use this thing. Okay, can see better. So this video published 2 days ago is the stock market bottom or dead cat bounce. Okay, you can go and read through that. So basically, he thinks that very near, somewhere very near to the bottom. Of course, he could be wrong as well. And Robin Ho is different, totally different. So he thinks that, you know, this is the Nasdaq bear market is really coming and it's going to affect the whole market, and there will be more downside to come. So in fact, I think he gave some opinions that the Nasdaq, I think, could fall to about 7,000. Now it's about 11,000 plus. So he thinks that the worst case scenario, the Nasdaq could fall to 7,000. So I think let me go to Facebook. All right. By the way, I'm not promoting any one of them, just that I'm sharing some of the things that I'm watching also. So I think Robin has this Facebook group, Robin Ho Trading Community. You can just go and browse through it, and yeah, I think it's this. All right. So he feels that, you know, this Nasdaq bear is entrenched, and this was a typical dead cat rebound. So yeah, so he felt that, you know, his technique pointing to a possible 9.5K bottom or a probable 7,000 bottom. So you can see that, you know, different trader, different investor, they have different opinion. So who will be right? We don't know until the event is over, right? So for now, I still maintain the fact that my opinion that, you know, we could be somewhere near the bottom. Okay. So yeah, so let's go through the market right now. Let me take a look at the I think okay. So it's bottom up context. So as I mentioned, okay, but before I go into that, like, just want to let you know that, okay, since I think there are about 280 people right now, so we actually invited Larry William in July for the Market Insights Virtual Summit. Okay, so you can go to the link over here, all right, and just fill up your name, email, and your mobile number. The mobile is actually mainly just for reminder SMS. I'm not going to spam you, okay? So just fill your details and pre-register your interest for this Market Insights Virtual Summit Quarter 3, 23rd and 24th of July. Of course, Larry is the keynote speaker. It's not easy to invite Larry. So he's the guy who is very, his specialty in forecasting, the market cycles and such. I think very, very interesting. So do register your interest right now. And for those who pre-register, I will also give you some bonus materials that only those who pre-register will get access to the material. All right. And also one more thing is that, do subscribe to our YouTube channel, and also our Telegram channel as well. We have about 5,001 people. So I'll post a link in the comments. So I think the comments is getting very quiet. Are you guys still with me? If you are still with me, yeah, just type yes or okay in the comments, or I take a sip of water. All right, so let's go to the S&P 500 chart right now. So today, bar chart, no, this is candle. All right, so okay, so the context for last week, I said that it is bottoming out. So I said that, there are a few scenarios. Let me remove the indicator first. So the few scenarios, I hope you guys still remember. All right, the few scenario is that, this could be the absolute bottom. All right, and then price just do a V-shaped recovery, which I don't think is that possible, because there's a lot of overhead resistance. The second scenario is that, price could just head up, higher, ping pong, a bit, come down a bit lower, go higher a little bit, just as in it's grinding a bit higher, like, so eventually then you'll be out of the downtrend. So this is the second scenario. And the third scenario is that, which is could be happening right now, all right, which is, price came down and then hit back up, rebounded, all right, and then come back down again, all right, and touch the low, okay, hunted the low and then rebounds back up again, okay, that kind of scenario. So of course, hopefully, I hope this will pan out, but of course, I could be wrong as well. So you can see that for S&P, it haven't hunted the low yet, but it is nearing there. For the Nasdaq futures, okay, it is also haven't hunted the previous low yet, but almost there. So it's rebound and come back down again. But for the Dow futures, Dow Jones, it already, all right, hunted the low. Okay, so let's see. And if next week price can actually rebound back up again, then I will be more bullish. Okay, more bullish. Okay, yeah, because actually it will trap. Yeah, as Yu Yang said, right, Dow already hunted the low already. So as I say, right, so this is the low over here, right? So if next week price can rebound back up again, then I will be more bullish. Okay, because this will trap a lot of short sellers to go short the market, but price cannot go down, and in fact price reverse back up again. Of course, I'm trying to pick the bottom. My thinking is that this could be the bottom, but the context, I still need to tell you that overall we are still in a downtrend. We are overall still in a downtrend. Overall, the trend is still down, which is, I mentioned 2 weeks ago. Trend is still down, be it in the daily time frame or the weekly time frame. So why do I say that? I put in my indicator, right? So you can see that price for the I'll put the S&P 500 now. Okay, for the S&P 500, all right, on the daily time frame, price is below the central pivot range, below the cloud, so it's clearly in a downtrend. All right. On the weekly time frame, we also broke below the cloud. All right, broke below the cloud. So if you're asking me objectively, we are in a downtrend now, okay? But I'm just trying to pick a bottom. All right. And for the Nasdaq, we are already in a downtrend since 1, 2, 3 weeks ago. Ever since price broke below the cloud and also the VWAP. All right, so I mentioned last week also that the S&P is actually also testing the VWAP right now. So the VWAP is the volume weighted average price over here, the anchor VWAP. All right, so we are still hanging there right now. Can you see over here? This is the VWAP. This is the VWAP over here, and also testing the Camarilla minor support. I would say that. Okay. All right. And this is the current state of the market right now. So I think I mentioned a few times already, the indices is down. If you are trying to do trend trading, if you're going to do position trading, then this is not a time for you to really buy in. You have to wait at least until price goes above the central pivot range for 2 consecutive months. Okay, clear on that. But if you are a investor kind planning to hold for more than 1 year, 2 year, 3 year that kind, then right now we are quite a low level, which I think it could be a potential bottom. All right, potential only. All right, we shall see next week how it go. All right, so it really depends. I repeat, I don't want to sound too long-winded, but I really need to get the context right, because in case you say that, hey, Alex say it's going to bottom, that kind of no, I'm that investor holding for 1 to 3 years, that kind, I think you could bottom pick. All right, but if you are strictly talking about trading, all right, for trend trading, position trading, right now the trend, it is still down. So the best is, if you are not experienced, the best is try not to touch it. Wait until price at least goes above the CPR, then you go into trend trade or position trade. All right. But the reason why I say how the market might move for the next 1 to 2 weeks, because of the intermarket analysis. All right, so it is because of certain things. All right, so I want to let you know that this thing over here, I hope I can show you. Where is this? All right, you guys can see the chart over here, right? So this is taken from the BCA research. So it says that the dollar has actually overshot the relative performance of the US equity. So right now, I am actually looking at the Forex market right now. Okay, the Forex market right now. So the dollar index, you might or might not know, I don't know whether you have been watching. Okay, the dollar has been really strong recently. Later, I will show you the dollar index chart. So the dollar index has been rallying recently. Okay, but I can see from the chart, right, comparing to the equities, right, XUS. So it generally, will revert back to the mean. So you can see that they generally move in tandem with each other, which means that when the dollar appreciate too fast, very too fast, then you kind of draw back down again. And when it is oversold, you're back to the equities level again, that kind. Okay, so it kind of a move in tandem. So right now, it is kind of, the dollar is kind of overstretched, okay, as compared to the equities market. Do you guys get what I'm trying to say? So there's a potential chance that it will revert back to the mean. Revert back to the mean that the dollar will have a correction. You will have a correction, means that you come back down, or the equities market will catch up, goes up and catch up with the dollar. Do you guys get what I'm trying to say? If you guys understand, just type USD in the comments. Dollar index. All right. So let's take a look at the dollar index right now. So back to naked chart. Dollar index, right? You go to trading view, you can just key in DXY in the search bar. DXY, dollar index. All right, you can see that ever since 2022, the start of the year, okay, downtrend is last year. This is 2022. This year, the US dollar has been rallying. Okay, so of course, the narrative that the market give you will be, as in the news give you, that right now we are in a risk of environment. So all the money, moving out of the equities market and into the safe haven, like, okay, the dollar. So when the market is uncertain, there's a correction, crash, market also always want to have certainty. Just want to place something that is safe. And the dollar is still the world reserve currency, so it's still considered a safe haven. So supposedly all the money, okay, all go to the USD. That's why the reason why it has been going up. It has been going up. All right. So as if you want to compare the correlationship, okay, between the dollar index and the US equities, you can actually go to TradingView also. There is this you can go to this indicators. You can just search for correlation coefficient. Just type COR and this correlation coefficient will come out. All right. At the symbol, you can put SPX, okay, S&P 500. Click apply. All right. So you can see that it is negative 0.53. All right. Negative meaning is inversely related, which means that when the dollar is up, the equities is down. When equities is down, the dollar is up, that kind of thing. So it's inversely correlated. When the number it is 1, okay, which means it's a perfect correlation. So for example, the US dollars move up, the equities also move up exactly the same, by the same magnitude and the same amount. So that's a perfect correlation. All right. Of course, if -1, it is the perfect inversely correlated, which means that the dollar go down by this magnitude, the equities also go down by the same magnitude as well, exactly the same. But of course, it cannot be -1 and 1. Okay, it is perfect. So generally, above 0.5, there is a inverse relationship. Minus 0.5, there's an inverse relationship, which means that when the dollar index is up, the equities will go down. But of course, as the numbers can differ from different platform, because I see that the TradingView give me a negative 0.53, but all right, the stock chart give me another value. So another way you can search the correlation, you can go to stock chart. So you can just type in the SPX S&P 500, right? Okay, and then at the bottom, right, there's some settings over here. All right, just to let you know, that you might have different platform to show you the correlation, etc. Just continue to use that platform. But generally, I use the stock charts and also the TradingView. So you can go to this indicator over here, right? Then you can just go and search for correlation, and then over here, the settings over here, right? You can just enter USD. All right, so this is based on 20 days time frame, 20 days. So you can see at the bottom, it is actually negative 0.62. So you can see the number actually differ from the TradingView number. So I don't know why, but generally, you just know that it is inversely correlated. So at this moment in time, but you can see that it is not always inversely correlated. There's sometimes a market will be the USD go up, the market also go up. All right, the USD go up, the market also go up. Okay, it's not always inversely correlated, which means that if the US dollars, right, continue to fall further, right, there is a potential chance that the equities market will hit higher. All right, you get what I'm trying to say, right? If the dollar continues to fall and fall further, the equities might rally. Okay, the equities market might rally. Of course, you can also see that the dollar recently has not been really that strong anymore. It cannot push up further. So of course, dollar index right now, if you base on how I normally view the chart, right, it is above the cloud, above the central pivot range and such. Is clear in uptrend, but based on my other kind of studies, proprietary studies, I think it could be hitting a potential top already, and there could be more downside to go. So this also form a basis which I think that the equities market, could rally soon. This is just one basis, okay? And the other one that I'm sharing with you is also the bonds market as well. All right, so this is the bonds market. You can go to the 30 years treasury bonds over here. All right, so this is the naked chart once again. This is the 30 years treasury bond, ZB on trading view. This is the futures chart. So of course, for the past, how many months? For the past, since start of March, right? Since March, price has been going down, okay? Going down, which means that the yield is going up, all right? It's going up. So for the 30 years yield is already 3%. For the 10 years yield, it is about 2.8%. So of course, the bond price and the yield is inversely correlated. When the bond price is down, the yield is going to go up. And because why recently the yield has been going up, I think you guys should know the reason. It is because of the inflation, interest rate, the Federal Reserve hiking the interest rate. So you go in tandem with the yield also. But you can see that recently, right, it is actually not going, the bond price is not going down. In fact, it is actually recovering already. It is going higher, which means that, it seems to me that the market is pricing in that maybe within the next 1 or 2 months, the inflation might not be that high anymore, and it's going to start rolling over. That's why, and the interest rate might not keep shooting up. Do you guys know what I'm trying to say? I hope I can explain this as simply as possible, which means that, the yield, this is the TNX yield, okay, it is also starting to come down already. Okay, so, that we have to wait and see the next month CPI inflation data and see whether the inflation level is really coming down or not. But from what I'm seeing from the bonds market, it seems that the market is already pricing in that, the yield might come down, which is really coming down, and the inflation rate might not be that high anymore. And I think I mentioned previously, right? I think from Larry William, I'm not sure whether I can still get you the data or I didn't save it, which means that based on Larry William, when inflation starts to roll over from a peak, right, from a high at a peak, and start to roll over, going down, is actually quite bullish for the equities market as well. Okay, so do you guys understand what I'm trying to tell you? So basically, I'm looking at the Forex, which is the dollar index, is the DXY. Okay, pointing that that the dollar might be coming down, and also that the bonds price potentially is going to head higher, which means that the yield is coming down, which means that the market could be pricing in that inflation data might not be that high for the next coming few months data. If you understand what I'm trying to say, just type yes in the comments. So that's the reason why I think that the market could be bottoming, but of course I could be wrong. Market is not so simple. I mean, sometimes it's not so simple to decipher just like that, but you can say that I'm biased, trying to find reason to understand why the market could be bottoming. But by the way, I also did trade the bonds market and also the Forex as well. So even though this is my personal opinion, but I really do trade the bonds market as well. So how I trade the bonds market, right, is I actually I didn't so-called buy the bonds directly. In fact, I actually do options trade on the bonds market. So I sold a call vertical on the bonds market. So which means that I am not expecting basically. So I sold, okay, call options. I sold call options, which means that I'm getting a premium by selling the call options. So which means that I think it will not come down any further, all right, within the next expiry date. I think within the next 30 or 40 days, that kind, based on the expiry date I go to. So I really do trade the bonds market as well. And I also do trade the dollar yen as well. Okay, so let me just share with you something that I'm doing now. Okay, so dollar yen, where is it? Dollar yen, yeah, dollar yen. So I have been, yeah, shorting the dollar also, because this is my opinion, right? So I must trade my opinion, correct or not? Correct or not? So I cannot just tell you that this day I didn't do anything, correct or not? So I do really do also do short that. For example, the dollar yen, the red line here is actually where I shorted. So right now I am actually profitable right now. So my expectation is that within the next 1 to 2 weeks, the dollar might continue to come down. All right, and the bonds market, at least for the next 1 to 2 weeks, might continue to head higher, because it has been really oversold already. Okay, all right, Ken. Yeah, sorry, Adrian, sorry, it's sell put. My bad. So it's sell put. Yeah, I sell put options on the bonds market, correct? So sorry about that. It is selling put. I sold put options. Okay, Ken. Yeah, Mark, yes, you're right. I sold put options. That's right. Sorry about that. Okay, yeah, blur already. Ken. All right. Let me see the question. Any indicator to support a downward movement in the market other than Ichimoku cloud? Oh, yes, I mentioned already, right? Last week, right? So if you are, you think that the Ichimoku cloud is still too complicated for you, don't know what to do, too many things to see, all the central pivot range and such, right? Very simple, right? As I mentioned, right, just use the Stan Weinstein stage analysis, okay, which means that when price is below the 30-week EMA, it is in a downtrend. Then don't buy. I said that last time. I didn't erase that. I think I mentioned 2 weeks ago. So for example, for the S&P 500, right? So you can add in the Weinstein 30-week EMA. All right, so I remove the VWAP. So you can see, right? So price is below the 30-week EMA, then it is in a downtrend. Okay, then don't buy. Okay, so this is one method to support a downward movement in the market other than the Ichimoku cloud. Okay, all right. Yes, that's right. So FS is selling call, expecting the price to go down. Okay. By the way, if I'm not sure how many are into options, but selling call, expecting the price to go down. Sell, but for options, right? Let's say, for example, I would just use the bonds as an example. All right. So for the bonds, right? As I mentioned, I sell put, right? For if I sell put, okay, price doesn't have to go up for me to be profitable. Okay, so if I sell options, okay, price can move sideways, I still can be profitable. Price can go higher up, of course, that's the best, I will be profitable. Price can go down slightly, not too much, I still can be profitable. Okay, so these are the 3 scenarios. All right, of course, options might be a bit too complicated to share, because I think most of you might not be so into options. Okay, and okay, just let me have a show of hand. How many of you are actually into options? If you're into options, right, just type yes in the comments. Okay, it could be just selling calls, selling puts, buying calls, buying put. But if you're trading options, right, and if you are very active, just type yes in the comments. I know have a gauge, right? Know how many of you are actually very active in options. Yeah. By the way, for the upcoming event, right? Right now it is still Market Insights virtual summit, but I think because the next event is going to be probably supported by Nasdaq. Okay, So Nasdaq be focusing a lot on options as well. So maybe within the near future, I might talk a little bit more on options. Okay, yeah. But I remember that when I first started to understand options, and it take me quite a while to understand options. Even buy call, sell call, buy put, sell put also takes me quite some time to understand. Right? Okay. So right now about 355 people. Right? If you guys can just do me a favor, just give me a like, share, or comments just give me a like, share, or comments. Okay. If you are on YouTube, do give me a like also, and also do subscribe to our channel as well, and do subscribe to our Telegram channel. Okay, all right. So I post the link in the comments, and this is the link for the Larry William submit in the coming July. I'll post the link also in the comments. If you can't see the comments in the replay, just see it on the screen, bit.ly/LarryW2022. So this is the site over here. Just pre-register interest, your name, email address, and your mobile for SMS reminder, and you are good to go. And for those who pre-register, you also get bonus materials that's exclusive for those who pre-register only. Okay, Ken? All right. So any questions so far before I, move on? I think right now, today, we have some time now. So this is, I actually only plan to talk about this only. Okay. Any questions so far before I move on? All right. So I think we have time. Just let me know your question. I will try to answer that. So let me take a look at the market right now. So the market is very bearish right now. The Nasdaq is down negative 1.8%. So it has hunted the low already. It has hunted this swing low already. Okay, it hunted this swing low. Okay, so my opinion is this. Okay, so if the market broke below the low, all right, today or next week, and and cannot recover, all right, then I have no choice but to say that it is really in a downtrend. But I still think that the interim bottom is very near, which means that we could see a sharp rally in the near future. Of course, it could be a dead cat bounce. I don't know. All right, because the market is really, really oversold. Of course, oversold can continue to get oversold even more. But I think that based on the breadth and such market breadth, we are really somewhere near that already lah. Okay. How long would we expect a relief rally to last? I don't know also. So of course, you can see that this month is already the 21st of May already. We are towards the late stage of May, nearing the end of May, and next month will be June, and in June we will have a new central pivot range, new CPR, right? So from what I see, the new CPR will be somewhere around here lah. Okay, will be somewhere around here. All right. So if price continue, like let's say for example, within the next 1 to 2 weeks, continue to go down lower, all right, the relief rally can just last for 1 to 2 weeks, go back up again, hit the CPR, and then come back down again. So it could last 1 to 2 weeks. I don't know. So we have to see how the market react, how fast the price move up, the magnitude of the price, and where it hits the resistance or the support level as well. All right. Since that you are mentioning that bonds might go up, does that mean that the market is potentially flowing out of the stock market and into the bonds market? Yes, that could be one of the reasons also, because right now the bonds market is giving a higher yield, right? Okay, it's giving a higher yield, right? So if you are an investor, right, so now the market interest rate is going to higher, and right now the 30 years bond is giving you a three-year kind of a yield, 3% yield. Of course, more investor might want to put the money into bonds, right? Because bonds essentially is risk-free to them, all right? And if it's going to go up even higher, okay, so sorry, what I'm trying to say, okay, sorry, I mean that what I'm trying to say that The bonds market, even though right now it is, sorry, I'm trying to go back to the bonds chart right now. Yeah, so bonds, okay, even though could be a relief rally going up higher within the next 1 or 2 weeks, but no, overall the trend, it is still down. So overall, in times to come, the bonds price could still come down, and which means that the interest rate you still maintain not at the extreme low level already, not the kind of 0% anymore. I think the 0% interest rate level, it is no more there already. So moving forward, to expect a higher interest rate, of course, I don't know how high you go. It could just stay at 2%, 3%, 4%, 5%, that kind. But if the market give a higher rate of return, of course, more investor will want to go to the bonds market, right? Because it is risk-free. 30 years treasury government bond, it is risk-free. Okay, all right. So any other question? Could you comment on the outlook for silver and gold? So for Annie, I do have a position in silver also. For silver, okay, it is also at a oversold level, at least for the gold and silver. All right, so for me, silver, I actually went in somewhere around this bar over here for silver. Of course, you might be asking, right? Hey, Alex, this is a downtrend, and why do you buy into that? I'm that I have my reason now. Okay, so essentially, I'm trying to also pick a bottom also, and one of the reason it is because that the XME, the metals and mining, all right, it is based on the 2-day time frame. All right, this is the metals and mining ETF. All right, it seems that it is kind of supported over here, all right, at the cloud level. And of course, all right, as I mentioned, right, if the dollar, it is going to get weaker, it is coming down, and because all the commodities and such, right, they are priced in USD, and that might push the metals price also a bit higher. All right, of course, today it is coming down, but I think it is still pretty okay. So my bias for gold and silver, the precious metals, in the short run is that it is going to move up higher. How high? I don't know. But meanwhile, I think that gold and silver, the metals, they are oversold, really oversold, okay, and it could head up higher in the coming 1 week or so. So that is my opinion for the silver and gold. But you need to understand that overall the gold and silver, they are based on the daily time frame, they are still in the downtrend. They are still in the downtrend. All right. So which means that next month there will be a new central pivot range. Okay, and when price go back higher up again, price could get rejected once again. All right. Okay. And oh yeah, and talking about that, right? The precious metals, right? Talking about the certain industry, right? The recent past 2 days, right? I think the monkeypox, okay, could benefit the health sectors and companies as well. And if you look at the seasonal chart over here for this month of May, of course, I know May is going to end soon, but typically for May, you can see that actually healthcare, it is actually quite bullish. One of the most bullish sector among the rest of the, as in most bullish among of the rest of the sectors. Okay, so one of the most bullish sectors. Okay, and yeah, that could benefit. And if you actually look at certain ETF health, right, they are actually moving quite nicely now. So let me share with you some ideas. Okay, I think it has already moved. Let me take a look. It is this IHI, medical device. Okay, it is pretty strong comparing to the overall market like S&P 500 and the Nasdaq, which is coming down, but the medical device, it is going up. All right, and like VHT, this is the Vanguard Healthcare ETF. Okay, it is also stronger than the market as well. All right. So let me share with you some things over here. Try ideas lah. Okay. So you still have to see. Let me see, where is it? Okay, I remove already. Okay, so for bull case over here, all right. In fact, the biotech actually this month is actually bullish. So we have to see next week whether the market could actually really turn or not. Okay, if market didn't turn, then forget about the health sector already. You pull everything down. Okay, so yeah, but just to let you know, for 13th of May until the 11th of July, the IBB, the biotech sector is actually pretty strong for the past 10 years, right? 90% of the time, which is 9 years, it is actually positive. All right. And for VHT, this is the Vanguard Health. So what's the difference between Vanguard Health and also the XLV? All right. So you can go to this ETF.com/VHT. Vanguard Health is more broad-based. This ETF consists of more than 440 health company. Yeah. So XLV itself is not so bullish. I agree with that. Because it is just only on the 66 companies in XLV. But for the Vanguard Health, you can see that you can go to over here and compare VHT versus XLV. All right. Can do a comparison. So the number of holdings for VHT is actually 400 plus, 440. Whereas for XLV is only concentrated on a lot of these big healthcare company, only 66. So you can say that the VHT is actually more broad-based, right? It can cover the whole health industry quite well. So for VHT from the 23rd of May, right, to the 15th of July also, for the past 13 years, all right, 92% of the times it is positive, which means that for the past 13 years, 12 years, it is actually positive. And also the IHI medical device, also on 23rd of May, okay, to the 19th of July. So they can see that there's quite a long runway, okay, for the past 11 years. 91% of time it is positive. So you can, if the market do really turn next week also and starting to turn, when the price starting to turn, right, you can look into the health sector. Okay, if you get what I'm trying to say, right, just type health in the comments. I'll take a sip of water. I was quite thirsty. I remember, I think 2 weeks ago, I forget to take my water in. Oh, I was damn thirsty. So XLB, no, I mean okay lah. I mean that it is not bullish, but it's still better than the index. Okay, Ken. But overall, IBB is not that bullish. IBB is quite bullish. IBB is actually quite bullish. Okay, sorry. IBB is actually quite bullish. Okay, so can you see that when the market is down, the tech sector, biotech tech sector is actually going higher. And I mean that the narrative again, might push the health companies up again. Could be the monkeypox event, okay, the vaccine for monkeypox or certain other things that could potentially push the health sector stronger than the rest of the market and also the sectors as well. All right, Ken. If market up, then healthcare go up, or if market down, then healthcare. Okay, Annie, I think you get misunderstood. What I mean that if the overall market is down, generally all the sectors, even healthcare sectors, will go down as well. Just that comparing to the rest of the sector, for example, health versus the tech sectors, health is relatively stronger than the tech sector, even though both goes down. You get what I'm trying to say? And why I say that if the market really do turn, let's say for example, the S&P 500, okay, next week really do turn up, okay, right, do goes up higher, then the health sector could potentially perform better than the rest of the other sectors as well. Okay, Ken? All right, so now you are talking about the financial sector. All right, financial sector. Financial sector right now is actually also not very strong. So it's pretty in tandem with the market. So it is also coming down. All right. Okay, so you can go to stockchart.com. You can go to this, let me see, where is it? This candle glance, all right, where it will show you the US S&P sectors over here. So I'll post the link in the comments. You should see it. So in a bird's eye view, right, you can see how are all the index and sectors doing, right? So this is SPX, XLY, discretionary, communication, technology, all right? So can you see that, all this is the S&P 500, right? So it is coming down, touching the low, so right? So you can see that the XLK actually is performing like the index going up, coming down, all right? The industrial right now is one of the worst, coming down even more, all right? Staple also coming down a lot, but can you see that like the health sectors have XLV over here, the health sectors, right? While the market is like going down to the low again, but the health sector is relatively stronger than the rest of the sector. It is actually forming a higher low. Can you see or not? It is not going lower, but it's forming a higher low. Of course, overall it is still down. Can understand overall it's still down, but it is relatively stronger, performing better than the rest of the other sectors. Utility is also the same because utility is defensive stock market, not turbo. So coming down, but it's still hovering down there pretty strong, holding the fort pretty well. All right, financial, not that strong. Normally, when the market it is down, the financial always tend to go down as well. So real estate also pretty same. It is down also. So communication wise is also slightly stronger than the market. Can you see that the market is coming down, touching the low, right? The communication, it is actually not touching the low yet. Can see it is actually not touching the low yet. So it's relatively stronger. So right now, in the midst of this sell-off correction downtrend, right? Actually, the XLV, and the XLC are the relatively stronger one. So when the market actually turns, okay, you can also look into the health sector as well. All right. And for the oil actually, I am not so sure about the energy sector also, because it seems that it is showing some sign of divergence. So for the XLE, okay, this XLE over here, then XOP. Okay, here, oops. Settings, candle. All right, so this is the, of course, energy is still strong because still strong, definitely strong. But I'm talking about other than the energy sector, but health and comms are the stronger one. All right, but I feel that it could be a time hitting also a interim peak for the commodity, especially the energy. You can see that for the I removed that shit. Let me add that again. This is XOP. You pay it over here. Settings. Candles. Okay. All right, so you can see that the energy sector overall, it is coming up, going up higher, but the XOP, it is forming kind of a divergence really. So it's not performing that well. So it's like, while the overall energy sector is going higher, the oil and gas exploration, and also the what's the other one? I forget what's the ETF name really. It is also forming a divergence really. So it's not going higher anymore. So I think that energy, we could be forming a kind of peak, okay, at the top. All right, so yeah, energy, it is crude oil, especially crude oil, doesn't seem so strong to me right now. So this is crude oil, this is crude oil, right? Not so strong right now, okay? And if you are looking at the overall commodity index, right? A lot of weightage, it is also from the energy sector as well. If I'm not mistaken, I think about 50% is on the energy sector. So a lot of weightage on energy sector. So you can see that it is also in a kind of consolidation zone over here. And until really price could break higher above the resistance over here, I'll be a bit skeptical of the price action right now, because it seems to me that there's a probable chance that price could come down like that. All right. So gas. All right. So gas, natural gas. Yes, I mentioned that it was in March, April, right? So you can see that it is going higher also. All right. So right now, I'm also not so sure about the natural gas anymore. This is just my personal opinion. I think that we might have hit interim peak right now. Okay, but overall, don't be mistaken. I mean that overall it is still uptrend, but right now I think that it might take a breather. I mean that you don't expect price to continue to go up like that, lah. Don't expect price to go up like that. It could, come down like that, a little bit, and then ping pong, and go back up again. Could be like that, but right now my view on the natural gas, on the crude oil, it is not so bullish now. Not so bullish doesn't mean that I'm bearish, just that there might be a correction. Okay. So for me personally, since I'm doing natural gas right now already, so I also might as well tell you, okay, when price was somewhere around here, yeah, when show this red candle over here, I in fact also sell a call options on the natural gas. I sell call options, okay, sell call, not a naked call options now. Okay, I sell vertical call options. Basically, I sell at I think it's 9.3, okay, and then 9.5. I buy at 9.5, so still pretty high. So yeah, so price, that's what I meant by selling options. When price come down, goes back up again, it doesn't just rally so high, I'm still in profit. Okay, price can go down, I'm still in profit. Price don't move, I can also profit. So I'm also I'm still holding my natural gas options position. So these are some things that I'm trading. Okay, all right. Yeah, so the only stock that I am holding right now is actually PEJ. Again, just sharing with you. This is the leisure and entertainment. Basically, is the DX. Is a consumer discretionary. I can say that. Okay. I entered somewhere around here. I think, yeah, here. So right now it's a bit underwater, but still holding well. While the market, it is coming down, right? It is still holding okay. It's not breaking the low yet, so we shall see. Because at the point in time, I was thinking that it was the low, that I might try to catch some of the sectors, and the leisure and the entertainment sector is one of the things that I'm looking at also. Okay, can. Let me see. All right, seems reach already 80 all-time high and losing momentum. But of course, we won't know. But if you are just judging from the trend, it is still uptrend. It is still clearly an uptrend. But yeah, the momentum, it seems to me, it is losing momentum now. But we never know. So please do your own due diligence if you're wanting to trade natural gas and oil and such, because all this, especially oil and gas, as in oil, natural oil, oil and the natural gas, they are very volatile. They are very volatile. So you need to know what you are doing. Okay. All right. Any possibility of an ascending triangle pattern for which one? For the natural gas, is it? Is it for the natural gas, Alvin? For which one? Is it DBC? DBC, right? DBC, right? Yes, ascending triangle, yes, but judging from my experience, okay, it doesn't look very strong to me. So personally, I don't really look at the chart pattern. I see like symmetrical ascending, wedges, and I don't really look into that. So purely based on my experience in reading the price action. All right. So any questions so far? All right. Any questions so far? Tesla is being sold down. Any comments? No comments. Because the market overall is down. And Tesla actually has a lot of weight on the index as well. So yeah, so it's not surprisingly. So right now, today, Friday, it is a very bearish, movement right now. So the Tesla is down 9%. It is in fact actually pulling down the Nasdaq as well, because Tesla has a lot of weight in the Nasdaq index as well. Okay. Let me see the question. I need to read. If the price of the stock and bonds keep falling, does that mean the investor think that economy is very poor because no one wants to put money? Yes. Okay. So right now, as I think I mentioned in the last, is it 2 weeks ago? Okay. Right now, we are in a stage that the modern portfolio doesn't hold anymore, where both the stock price and the bond price are coming down. So it seems that it could be we could be heading into a stagflation, that kind of scenario lah. So all the things are failing us, that kind of thing. Everything is coming down. Yeah. All right. So right now it is a risk-off environment, and people are putting the money just into the dollar itself. So at least this is what I'm seeing in the market as well, because the crypto market is down as well, bonds market down, equities market down, commodities is not moving that high, also that right now also down. Everything is down, so only the dollar index is up. Is it up right now, dollar index? Yeah, so dollar index is still going higher. Overall is still higher. Today is also higher. Okay. All right. So what's the difference between oil ETF of CL? CL1 is not ETF. SF. CL1 is the futures. CL1 is the futures. All right. USO is the oil ETF. USO is the oil ETF. All right. Okay. So James is asking, Hong Kong stocks, is it the bottom right now? Let's take a look at Hong Kong stocks. It has been a while. Hong Kong stocks. All right. Right now, I would say price is still in a downtrend, but it seems to me that it is price. It is actually consolidating. It's ranging, and it is in a tighter movement. I think this is good. It is good, which means that the selling is not that strong anymore. So this sort of contraction, from a big range, right, to I just put a naked chart right now, easier to see. All right, this is the Hong Kong index. Okay, initially big range and then into a smaller range. So there's a volatility contraction. which is good when it's in a downtrend and when it is basing out. And if you add in the chart, all right, so this is the, all right, we are very near back at the cloud and the CPR again. So let's say if price can really break above the cloud once again, I will be more bullish on the Hang Seng. I think the Hong Kong and the Chinese market, I think personally, we are almost there already. My personal opinion, we're almost there. As in the downtrend could be over soon. But, you know, when the US market, you know, kind of catches a cold, all right, the Hong Kong market might not be spared also, but generally we shall see how it goes. But overall, I can see that not that bearish anymore for the Hong Kong market. Right, I think almost there. So, but I still won't go in yet now. I still won't go in yet because it is still telling me that below the cloud and below the CPR also. Okay. If you really want to invest in the Chinese stocks, I would prefer that you buy for long term. I would prefer that you buy those that are listed in the Hong Kong Stock Exchange or the Chinese Stock Exchange, because the ongoing, you know, the ADR between the ADR means that those are Chinese stock that's listed in the US market. We are really not sure whether it will get delisted eventually. So don't want to go through the hassle and such. So I think if you want to invest in a Chinese stock, just go directly to the Hong Kong exchange or the Chinese exchange via, you know, some of the brokers like Tiger Brokers, Moon Brokers, etc. It can be done. All right. If you're doing, of course, short term, I think you can bar in the US market. I think that's fine lah. Okay, but generally, I prefer if you go direct to the Hong Kong market. If the bear market really kicks in, right, typically how long it will last before the market? Actually, we don't really know that, because typically a bear market is shorter, definitely much shorter, okay, than the bull market, obviously, right? So typically within 1 to 2 years, it will be over, okay, 1 to 2 years. But of course, the COVID sell-off is the extreme case, all right? COVID sell-off in 2020, all right, this was the COVID sell-off, all right, it just take about 2 to 3 months, yeah, from February to March, end of March, just takes about 2 months, and then the bear market is over already, all right? So we don't try to guess how long the bear market will end, okay? The price will tell you one, So I'll add in my indicator over here. So just add the cloud only, okay? No cloud, CPR, got CPR, no? CPR only. Right, can you see that the COVID sell-off over here? Generally, when price is in uptrend, price is above the central pivot range, also get supported, right? Okay, crash, come down, okay? So how do you know that the uptrend is here? First, right, when price is above the central pivot range, over here, it tells you that the downtrend is actually potentially ending. If price can stay above the central pivot range for 2 consecutive months, this is the first month above the CPR, second month above the CPR, then there's a very high chance, I would say that about 80 to 90% probability that the downtrend is over and is heading back into an uptrend. So you can see from here, the COVID sell-off, you know, this is going higher. All right. So in this case, for example, right now we are still in a downtrend. Can you see that overall, generally, price is below the CPR, All right. Of course, there's a strong counter trend rally, but still below CPR, resisted over here, right? Which means that, you know, if you really want to go long into the market, right, it would take at least until July, until July, until 7月 July, then you can enter. Why? What's the reason? Okay, because right now price it is still below the central pivot range, correct or not? All right, if next month the central pivot range is here and price goes above, all right, then it is in June, right? The first month it is above the central pivot range, correct or not? And then the second month, if price can stay above the central pivot range, July, then I can say that the market should have resumed its uptrend already. Okay, which means that, okay, for the market to turn into an uptrend, right? The earliest, okay, it is July. Because price need at least, for me to determine, right, to stay above the CPR for at least 2 months. Okay, so earliest confirm uptrend, it is in July. Do you guys what I'm trying to say about this CPR thing or not? If you understand about this CPR thing, 2 consecutive months, that kind, this my explanation, right? Just type CPR in the comments. Type CPR in the comments. Okay. 哇，什么Q Banky，什么5宫6角7翻身的？How I heard that before, but what does that mean? I forgot already. All right. Can you understand or not? If you understand, just engage with me. Right now, we still have about 280 people in the room. Okay, can or not? All right. So I repeat, confirm uptrend. I think the earliest, right, is take at least 2 months. Price to be above the CPR for 2 months. So I think I mentioned that before also, like, I think in my 2 or 3 weeks ago. So you can see that in the 2008 correction, not crash, correction, can you see that overall price is above the CPR, then come back down below the CPR, right? Can you see this is in 2008, 2008, this is 2008, 2008. Okay, first month above the CPR, okay, potential change of trend. Okay, second month above the CPR, this is the second month already. So there is a very high chance that the correction or crash is over and we are heading into an uptrend. So this is another example over here. So we can go back down. All right, so you can see that in this 2018, another crash over here, heavy correction. Okay, down. Okay, ping pong down. All right, so this is the first month. That price is above the CPR, right? Potentially uptrend already. Second month, potential price is above the CPR, so we can high probability that price is going to back into an uptrend again. All right. Another example over here. This is in 2016 correction. Okay, coming down. All right. First month above the CPR, potential change of trend. Second month, there's a high probability that the downtrend is over and market will resume its uptrend. Can or not? All right. So this is in 2016 also correction. Okay, down below CPR. Okay, this is the first month that price is above the CPR. All right. Second month price is above the CPR. Okay, then there's a very high chance that we are back into an uptrend once again. Can understand so far? I think I give you quite a number of examples already. It should be quite clear, right? So once again, I think only a very few of you type CPR. If you understand what I'm trying to say, just type CPR in the comments. All right. So wow, today market is really bearish. So we shall see next week. All right. So I think we 1 hour 22 minutes, nearing to 1 o'clock already. So I just want to recap my things today. Okay, just a quick recap over here. once again, my stand still hasn't changed. I feel that, we could have bottomed out. Okay, of course, right now, today, it doesn't seem so, or at least we are very near to the bottom. Okay, we shall see next week also because of the market breadth, internals, and such, etc. But overall, the trend, it is still down. If you are doing trend trading or position trading, if you are trying to pick a bottom, then I think that, we are somewhere near, based on my personal opinion. Of course, price can continue to go down. We never know. Okay, so please do your own due diligence. Like others traders' opinion, okay, still quite diverse. Adam Khoo, which is a pretty similar view as me, felt that, either we have bottomed out or we are very near to a bottom. Price can continue to go down a little bit more, but somewhere around there. While Robin Ho, right, feels that, we are in an entrenched bear market, which means that there will be a lot more downside to go. Okay, so how do you want to take side? It is up to you, but overall, trend is still down. Overall, the trend is still down. As such, I repeat again, don't try to buy for long term. Okay, trend trading, don't buy now. Position trading, don't buy now. Okay, all right. If you are doing short term trading, I think it's fine. Long short, I think that is fine. Can or not? Can, all right. This is just my opinion. And if the equities market sometimes have no opportunities, all right, then for me, I look into the Forex and the commodities market, which I've been telling you, I think, for the past 3 weeks already. So for me, I don't really trade the equities market right now. So quite clear, only one PEJ at the moment. Okay. So yeah, so I need to learn how to trade others market. Of course, you can short the equities, but I don't really prefer to short the equities right now because I felt that it is really overdone. So the downside is the risk reward is not there anymore lah. Okay, wow. Okay, the risk reward is not anymore. So if I want to short, I'll be shorting here lah, not now lah. 头脑派. Okay, yeah. All right. Adam Khoo is perpetual bull. Yes, I think he mentioned that, you must always be optimistic about the market, but in a way, that is his opinion. That doesn't matter. But for the past few times, he has been quite accurate. I would say he's been quite accurate. Okay. Yeah. Anyway, yeah, this is just my personal opinion about him. But I think he knows his stuff because he's been trading the market for so long already. But opinions can change very fast. Even though he's a perpetual bull, but he can trade options, he can trade Forex and such. So he has a lot of things to trade. It doesn't mean that he has just to trade equities market. All right. One last question about how about uranium stock? Uranium stocks are, I think, also not good. Okay, uranium stocks also not good. I think I watched before previously. It is also down. Okay, rebounding recently, which is in line with the gold and silver. Okay, I think it could have a bit more upside to go, but overall, I think it is still in the downtrend market. So it's the same line as the gold and the silver market. Yeah. Short-term wise, there's a potential to bounce. There's a potential bounce up. But, overall trend, it is still down. Okay, Ken? I think enough for today already. Also 1 hour and 30 minutes already. So I think with that, I think I shall end the session today. I'm pretty low in energy today also. Okay, so once again, if you think that you feel you get some benefit, some value from my Facebook Live, give me a shout out, type value in the comments. So give me some encouragement or let Facebook know as well. Okay. So do give me some like, share, or comments. Subscribe to our YouTube channel, and do like our YouTube channel as well. Yeah. So once again, if you enjoy the content, just type value in the comments. Give me some encouragement. All right. So yes, that's all for today. So yeah, low energy today. So thank you so much for being with me until 1 a.m. So thank you so much. And I will see you next week. And we shall see the market in the coming week or so. Okay, Ken? All right. So thank you so much. Good night, and bye-bye.